Right, hello and welcome to Camel Finance. I'm your boy, Camel, and today we've of course got to talk about CPI. First of all, though, I just wanted to make a quick public service announcement since over 96% of you are men. Men, it is Valentine's Day today, so if you forgot, okay, there's still time. Okay, there's still time. Pop in somewhere on the way home. And speaking as Uncle Camel to the younger viewers, okay, perhaps in newer relationships, if she told you she doesn't want anything, she doesn't care about Valentine's Day, that was a lie. That was a trap, okay? And you fell for it. So, women are complex creatures, okay? You will learn this as you get older. Anyway, all jokes aside, quick reminder, we're going to do the live stream on Friday. I may or may not post a normal video on Friday morning, so if I don't do that, that's because we are saving ourselves for the live stream. It is going to be on Friday, and I'm aiming to get that live around 7:30, 8 o'clock GMT, and we'll see how long it goes on for. So, of course, the big news as of yesterday was that Camel is apparently completely wrong about CPI. CPI came in way hotter than I thought. I thought we'd quite easily get onto a 2 handle based on all the research and analysis that I've shown you. And so it begs a few questions, doesn't it, right? Am I completely wrong? Is my analysis wrong? Are we just delayed for a month? And are we going to see that 2 handle next month? Or is inflation going to start to drop significantly as of next month? Or is CPI manipulated, right? And of course, data is only manipulated when it goes against one's analysis. So if it was manipulated to fit my hypothesis, then of course we would have accepted it. And because it goes against my hypothesis, it must be manipulation, right? So the question is, like, what is going on? Am I wrong about this? Or, like I said, are we delayed for a month? Unfortunately, there's no real way of knowing in the immediate term. I've been using Trueflation for well over a year, and this is the first time that it's caught me completely wrong-footed. So it begs the question, doesn't it, right? Who has more incentivization to be wrong about inflation? I believe Trueflation is probably more accurate than the government data. Again, maybe I am appending a bias to my own narrative. The big thing that we were looking to see from inflation was its impact on rate hikes or lack thereof. And so far as it stands, we have completely taken the cuts off the table, haven't we? So 91.5% probability we are going to be paused now in March's meeting, and clicking out to May's meeting, they've practically said that we're going to be continuing to be paused in May's meeting as well. So we have repriced, not in the direction I thought we would, because obviously we've seen a hotter CPI print, and I thought we would start to see a colder CPI print. I've seen people speculating that perhaps they're going to do a revision in a couple of weeks' time, and then they'll revise the number down from the 3 onto a 2 handle. Maybe that is just pure hopium. Like I said, unfortunately, there's no real way to know until we've seen some more data. And of course, we live in this world where the data is somewhat fugazi. As always, I have a plan B in case this primary hypothesis ends up failing. And that plan B is that this is what we're going to do. We've already found a bottom in inflation, and then we're going to resume higher. And if we have to adjust to that, that's fine as well. As always, it's not really about being right or wrong. It's about staying on the right side of the market. The reason we need to have a hypothesis is just so that we can have a way of gauging whether or not things are moving in line with our expectations, right? It doesn't really matter what your hypothesis is. It could be that Uncle Camel's going to bid the market to Valhalla. And if that's your hypothesis, it's probably not a very good one. But at least you have a framework within which you can work and within which you can ask yourself every day, is the market behaving as if Uncle Camel is bidding this thing to Valhalla? So as it stands, this was right. This was perfectly right for months and months and months, well over a year, in fact. And now at the hard right edge, we have apparently got quite a significant deviation. Trueflation is usually significantly below the US government reported rate, but can't remember a time it was this far below. To me, that's spurious. It's spurious because it has a good track record, and now suddenly it's broken. But again, data is data, right? What can I really do? I can't, I could throw my toys out of the pram and say, oh, it's all manipulation, right? Of course, I couldn't have been wrong, but maybe I am wrong, right? And that's why I say, it's important to have a framework, to keep asking yourself, are things going the way we expect them to go? And the truth is, right now, they're not. So if, of course, we were to get a revision lower, that might be pure hopium. But if we did get that, then we could continue to accept this as the hypothesis. If next month's readout, we see a huge drop from the 3.4. I've just realized that 3.4 number is wrong. It should be 3.1, right? So, okay, maybe Trueflation is broken. Either way, my point remains. If we get to the next CPI print and next month we see a low 2, for example, then we could probably continue to accept this, right? But if we continue to see sticky inflation, whether it's a high 2 handle or even a 3 on the next CPI print, then we are going to be forced to say, okay, this is probably not playing out. And maybe we need to re-establish a new hypothesis, a new framework within which we can work going forward. Jordan here nails it, because the first rate cuts are bullish when done during a normalization, and we got an average return 1 year out of 13.5% for the S&P 500. Conversely, the first cuts into a recession are bearish with an average 1 year return of minus 11%. But how do we know whether the Fed is cutting into normalization or a recession when the data is all fugazi? So this is the challenge, right? This is what we're dealing with, and there's no point complaining, right? There's no point being mad about it. There's no point getting emotional, because it is what it is, right? There's nothing we can do about it. We just have to do the best we can, take the data that we're given, and like I said, come up with a hypothesis and continue. So as it stands, my hypothesis is still the same. I'm going to keep my hypothesis for 1 more month. And the reason for this is not so much to do with inflation data and rate hikes, but to do with the charts. So we're going to go straight into some charts now, and I'm going to show you exactly why I stand with this hypothesis, at least for the next week or so. So starting off with the dollar, right, the DXY chart, we were talking about this deviation above the 104 and change level into CPI. So if this thing is to roll over the next couple of sessions, let's say 3, 4, 5 trading sessions, and break down from this upward sloping red support line, then ultimately nothing's really different. Okay, but as we said all along, if this breakout is for real, continues to move higher, then of course we have indeed confirmed an early 3-year cycle low for the dollar index, and that is likely going to pressure risk. So far, it's hard for me to say, well, this is completely invalidated when we expected to see a break above the 104 and change level into CPI. So we also expected to see it roll over, hasn't done that yet. But if it does, then again, I can't really say that anything is out of the ordinary here. Bitcoin as well, look at this, right? That's the best it could manage. That candle right here, that wick, that's all it could manage. And now we're at new relative local highs, 51 and change. Okay, so again, what am I supposed to say? I was flat wrong about CPI, but what am I supposed to do? Sell my Bitcoin position? No, of course not. The stock market as well, they were quite big red days. But objectively speaking, the facts are the facts. What did we do? We moved down into support and didn't close below it. So close below it, and as I've been saying over and over again, we'll lock in the position, we'll lock in the profit, from both of these positions. But there's a very good chance that what we did yesterday was just a technical move into support, about to bounce off of here and continue higher, just like we did back here, right? Just like we did here, and of course here. So is this time different to those prior 3? I don't know. That's to be determined. If we close daily candles below this trend line today, then of course we can look at taking the profit, and I'll notify you if I do so. But if we have a big green push off today or into the end of the week, then I wouldn't be surprised by that. And the reason is, if we measure from this cycle low here to here, this is only day 26 of an expected 40-day low to low cycle. So we would normally expect a decent right translated cycle to top around day 30 to 35. So there is potentially still another week or so, perhaps even 2 full weeks of upside here before we even have to attempt to find a cycle low. So I'm not saying that we are not going to break down from this upward sloping red support line. Like I've said over and over and over again, if we do, I'll lock in the profit from these trades and sit on the sides. But if we are to bounce from here, then really all this was a classic CPI shakeout. The exact same for the NASDAQ, right? Look, big gap down, big scary, a lot of narrative, but what did we really do? We moved down to support and held it. So again, push off today and tomorrow, and we'll keep pushing the longs, break down, and we'll take the profit. The Dow Jones, a worse situation than the NASDAQ and the S&P. We did technically get a close below the red support line. So that's, I consider, an early warning sign. So if today's candle looks something like this and creates a lower low relative to yesterday's low, then I'll probably just take the profit on this trade. And of course, I'll notify you if I do. If, however, we get some kind of reversal and hold this trend line into the end of the week, then why should I close my position? Why shouldn't I continue to push it? The Russell 2K was making good progress, right? I think we found a new level the market's respecting. This can be our new line in the sand. Again, so far we're holding that support, aren't we? So again, similarly, push off from here. And what have we really done? Not a whole heap of technical damage. Those are the facts. So hopefully you can see from all of this that not a great deal has really changed, right? Not a lot of damage has occurred. This is certainly concerning. This is certainly concerning that we've seen such a deviation between this number and the government reported rate. This should be a 1, I'm pretty sure of that. But like I said, this is the first time. Now, is it the first time because we're about to change trends? Is it the first time because the government has manipulated the data? Is it the first time because this is completely BS and has miscalculated? I'll leave you to be the judge of that, okay? I'll leave you to be the judge of that. It's not for me to tell you what's going on. I just give you my opinion and you're supposed to come to your own conclusion. As I said, I stand with my analysis for 1 more month because next month will be the tell, right? We either start to actually move into deflation or we don't. And if we don't, then we've got our plan B, right? And that is that we're probably going to see more and more inflation. And we can adjust to that because we did fine capturing a whole heap of markets during the prior spike, right? During the prior run of inflation, when we went up to, Trueflation had us on about 20% inflation, and the government was reporting 9%, we did just fine capturing the bulk of the market during that highly inflationary period. So I don't think it's going to change much. As I said, I stand with this analysis for another month until we see another CPI print. And from there, we'll be able to say either that, yes, this is in play and something's wrong with this, or if it starts to bounce and we see Trueflation tick up over the coming months, then we know Camel was wrong on this primary hypothesis. As I showed you in the charts, not really a great deal to complain about as of yet. It's also worth noting that, as you can see from the seasonal tendency chart, we are in that neighborhood where we should expect seasonal weakness. So is some kind of sideways chop and a bit of a pullback into a weekly cycle low decline to be expected over the next couple of months? Yes. And would that be the end of the world? No. If I put up the S&P 500 chart, okay, look at this weekly cycle low denoted by this blue arrow back here. That's at the end of April. Now, this would be a perfect weekly cycle and would also align perfectly with this daily cycle denoted in green. There are a couple of paths that we could expect from here. Either, like I said earlier, we hold support, bounce up and continue here, daily cycle as my yellow suggests, and then go and find a weekly cycle low as my yellow squiggle suggests. Or perhaps what we have to entertain is some kind of breakdown, daily cycle low, countertrend bounce, one more rollover into that weekly cycle low. There's also a possibility that we'll end up labeling this as the weekly cycle low if we were to do something like this and then come roaring out of here way higher. As ever, we'll take it one day at a time, but the seasonality, as I just showed you, aligns very nicely with this yellow squiggle to play out, right? Another push up, daily cycle low, a left translated daily cycle that rolls over into that next daily and weekly cycle, and then we should be able to resume another full weekly cycle, which hopefully right translates into that blow off top. Something else I haven't mentioned up to this point, we are working under the assumption that the first cut can be tolerated, maybe the second rate cut can be tolerated by the market, but usually, based on historical data, we will see the top come in for the stock market within the first two cuts of the onset of the cutting cycle. So of course, there's another piece of silver lining to this rainy cloud in that the longer we continue to take rate cuts off the table, right? The further out they start to push the first cut back. As you can see, there's 23% chance at the moment that we remain paused in June. But if this continues to price to the upside, okay, just like we've seen with March and May's meeting, then, the longer they keep this thing running, right, the longer they refuse to start cutting for, and the longer the system can tolerate these more restrictive policies without something breaking and forcing them to cut, then the longer we can run and the higher we can go in both the stocks and the crypto markets. So the silver lining here is we shouldn't really be rooting for cuts anyway. I wouldn't say I was rooting for cuts. I would just say I was more expecting something to break. Maybe that happens because remember, we got the BTFP ended in March. But as ever, one day at a time, right? For now, what do we know? For now, cuts are off the table for the foreseeable future. Since cuts are off the table for the foreseeable future, we should have plenty of time left to see higher prices in both Bitcoin and the stock market. So long and strong until the charts start to tell us something different. That could be today. As I said, we could lose these supports today. But so far, so good, particularly if we can see some green coming into the market in today's session. And remember, with that context, knowing about the seasonality, it wouldn't be anything out of the norm to see a little bit of weakness into the next couple of daily cycles. Also worth noting that champion stock investor Mark Minervini says that he doesn't think a major top is being made here. To the contrary, the CPI data could cause a pullback in certain areas of the market, but longer term models remain bullish and buy signals from early January still intact. Extended stocks are vulnerable, but the odds are that a pullback of around 4 to 7% in the S&P present a buying opportunity, and kind of feeds into this idea that we could see a correction into that daily and weekly cycle low, right? And that would be a buyable cycle low. Interestingly, the hot CPI data may in fact help to keep this market rally going. Why? Because there is less likelihood of aggressive rate cuts, which makes small caps less favorable, which we've seen in the Russell 2000 reaction. The money that has favored the mega cap names, which of course dominate index weightings, may not rotate out, and thus keeping an already extended area of the market supported. We've enjoyed great success in individual stock trading and indexing positions, and with that said, going into this week, he was concerned that we may have gotten to the point where we had too much of a good thing and were creating some short-term froth. But a pullback was expected, and Mark started positioning for it last week with reducing risk today and tightening stops up. As I've been talking about over the past week as well, remember, I've been saying that those trend lines should be respected on any breakdowns and that we should be getting ready to take the profit and perhaps sit on the side for a few weeks. So volatility's been low and it may have just started a slight move higher, and that would make sense as we enter that relatively weak part of the year, which of course aligns with this slide from back here. However, if we can get a rate cut around the middle of the year without a recession, then the convergence with a strong second half of 2024 into the first half of 2025 presidential cycle and the strong tendency after a first rate cut could set the market up for a very strong rally and a continued bull market. In the meantime, pullbacks are normal and healthy as long as they are within the context of a long-term uptrend. Again, it speaks to this idea that if we can get this decline into the weekly cycle, that sets us up for a very, very strong rally and the completion of that blow-off top hypothesis. So overall, right, things don't look so bad. There's a time to be in the market, there's a time to be out the market, lose the supports, and it'll be time to sit on the sides until we can find some cycle lows again. The good news is, look, Bitcoin doesn't care, right? Bitcoin doesn't care, so happy days there. As I said a bunch of times, overall, things don't look so bad, even though we should probably expect a little bit of seasonal weakness. And so for now, at least, until we can see another CPI print, all we can really do is stand with the hypothesis and be aware that it is being brought into question. Over in the realm of Bitcoin, I want to show you this. We've got a new commercial from Coinbase.
Being on the penny used to mean something. It was worthy compensation for thoughts. But now it's useless fodder for petty wishes tossed out like common garbage 120 million times a year. Even though it's still technically money. It's tortured, humiliated, forgotten. The currency of choice for paying people back with spite. This is $50, by the way.
Why are you doing this?
Get me off this piece of scrap metal. Make me digital. Let me soar. Imagine me actually paying for stuff. Amongst the people again, instantly traveling the globe without fees or friction. Old Abe just wants to be good at being money again. Is that too much to ask for an old top-hatted dreamer?
And these commercials seem to be working because yesterday's ETF inflows with an insane 631 million, with BlackRock being a little bit shy of $500 million. Meanwhile, GBTC outflows were at just $73 million. So price is down compared to Monday because of other markets crashing on CPI numbers, which came in hot, but expected rate cuts are now only in July instead of June, and all of this based on random made-up numbers, right? Of course, since this tweet was put out yesterday, you know, like I just showed you, Bitcoin is doing Bitcoin things, okay? Look at this. This is strength that you see typically in a left translated cycle. So the moral of the story is people tried to dump Bitcoin because it was a risk-off day, but just ended up selling all their coins to BlackRock, who are of course more than happy to accept said Bitcoin. So pause your screen, take a good look at this, okay? The demand for Bitcoin is there, and this is likely the reason why we're seeing this big, strong push in Bitcoin. Look, Bitcoin doing Bitcoin things. And speaking of Bitcoin doing Bitcoin things, last slide before we go over a couple more charts. Bitcoin is at all-time high in the following countries. Okay, again, pause your screen, take a good look at that. And so we've done most of the charts. I just wanted to point out a couple of things. I think I have a good read on gold. So here's what I'm looking for. I'm going to get rid of these yellow squiggles. I think what we're going to see now is a cycle low forced sometime around here. Okay, so out of that cycle low, we'll be looking to make a swing. I have a counter trend bounce up here, a left translation and a rollover. And it is in here that I will be looking to get short. Now, whether that short comes from this neighborhood or higher up is to be determined. Preferably, it would have a confluence with a retest of the broken support in red. Perhaps looks more like this, and then we can get short in here. This is what I'll be looking to do. So we've been calling this out for a long time, targeting a daily and weekly cycle lower, and perhaps even another weekly cycle to the downside. So let's see if we can get that. But first, I don't want to be shorting this current move, since we know a daily cycle low swing and reversal is coming, right? If I was to short here, we're just going to find a daily cycle low, swing and reverse, and I don't want to be near that as a short. So I'd much rather wait for the counter trend bounce and the cycle failure, and then we can attack on the short side. Kind of a similar deal with oil, right? Again, these squiggles, if you've been here before, especially over the last couple of weeks, I've been talking about this all the time. I said that there's a good chance I'm wrong, and if I'm wrong, then oil's just going to keep doing this, right? But I also said, in line with my squiggles, wouldn't surprise me at all to see a counter trend bounce into CPI that rolls over, forms a left translated daily cycle, ends up breaking this upward sloping support line in red, which is the trigger for my short, and then will confirm by printing a daily cycle failure, which would be taking out this low from back here at around 71.69. So again, as I was saying earlier with all the other charts, nothing is really out of the ordinary, right? Apart from the fact I got CPI completely wrong, arguably my fault, arguably not, I'll let you be the judge of that. Everything else is behaving exactly as I thought it would behave. So it's difficult for me to adjust my stance until the market proves me wrong. Remember, the charts are the king, not the CPI data. If these charts start to behave completely different to all of my yellow squiggles and expectations, then we can have a complete reassessment. But for now, if it ain't broke, don't fix it, right? So we'll just continue to do what we can to take this thing one day at a time with no emotion, and we'll just let the market tell us, right? We'll let the market tell us. I also was talking about these crypto-related miners and a bunch of other crypto-related miners in the members section, and I was saying that, some chop is to be expected. Some chop and some volatility, perhaps even to backfill these gaps, right? And I said that, this is just CPI being CPI. This is what it does. It chops people out, it scares people with the headlines, and then it typically turns around and reverses way higher. And already, as you can see, this is going to be a new opening high at the open for Coinbase relative to this local high from back here. We also have MicroStrategy about to gap above both these high clusters and hopefully push off. Riot as well, another gap, right? You're getting the picture. And Marathon, you're also getting the picture. So there seems to be an awful lot of strength. I don't think now is the time to be puking positions. As I said many, many times, respect the breakdowns if they occur on daily closing bases. For the members, I put out a video yesterday, and as I said in that video, I'll continue to update you in the community tab if I make any changes. But overall, CPI doing CPI things, right? Causing a bunch of fear, causing a bunch of panic, and a bunch of big red candles, and apparently reversing them the following day. So the closes to the week will be important as always. Since we're doing a live stream party on Friday, maybe we can watch some of the closes together and have a drink and share a cigar. In the meantime, fellas, like I said, it's Valentine's Day. Don't forget, okay? And for everyone else, I hope you're doing well in life. Until next time, take care from me. All the best. Cheers. Bye.